Do you keep getting calls from insurance agents and supposed financial planners that want to do an absolutely free life insurance review for you? Well, before you meet with them and buy anything, there's a few things that I want to discuss with you in this episode of the Real Money Doctor Show.
My passion in life is to help as many people as possible get, protect, and enjoy their money, life, and retirement.
I know you want to do the right thing for your family. You do too. But you're worried that you might be getting ripped off by insurance agents. You know, you probably are. According to the National Association of Insurance Commissioners, in 2014, insurance-related carriers made up more than 36% of the U.S. gross domestic product shares for financial institutions. Further, the Insurance Information Institute represented insurance's share of the national gross domestic product in 2016 was 2.7%, coming in at a whopping $507.7 billion. There's absolutely no question. Insurance is big business. Life insurance is really a critical part of taking care of your responsibilities to your family. Everybody's going to die at some point in time. It's just a question of when. Insurance is there so that when you do die, your family doesn't miss you, at least financially. You've taken care of those things that you would have taken care of if you were alive. But now the problem starts. What's insurance all about? It's actually a little bit simpler than what everybody makes it out to be. You give the insurance company money. If you don't die, they get to keep the money. If you die, they give some of the money back to your family. That sounds simple enough. From there, it really starts to grow. It starts to grow because insurance is big business. They're there to make money. Their idea of making money is keep taking more from you and giving you less back. There are just two types of insurance, term and permanent. Term is the simplest. I give you money, I die, you give money to family. It has absolutely no cash value to it at all. You're paying for the cost of the insurance itself, nothing more, no cash value. The other one is permanent insurance. What happens with permanent insurance of any type is it has some type of cash value. The easiest one to understand is whole life. You put money in, it pays for the insurance, and there's some type of a savings component to it. And eventually, it has cash value. It's a lovely thing, and you can borrow against it. You should never do that, but you can borrow against the cash value. And whole life makes some sense because the money grows tax deferred, life is lovely. The problem comes in with whole life and the other two general types, which are variable and universal. You pay for the insurance, and there's some mysterious type of savings program that nobody can identify what your cash value is. I know this for a fact. I used to sell insurance way back when. And I walked into somebody and said, well, where's your policy at? Here it is, oh, here's it is variable policy. How much cash value do you have? They didn't know. Let's call your agent, let's find out. The agent didn't know. It took a week to get a computer printout from the company to find out what the cash value was. It was never anywhere near what they thought it was going to be. Permanent insurance, whole life, variable, universal, and whatever happened, marketing name they happen to be using at that point in time for that particular product they're pushing, all those permanent products make the company and the agent tons of money. It's bad enough that on term, the first year premium, whatever you're paying the first year, is generally their commission. Hey, that's the way it goes. You pay for a loaf of bread, you get a loaf of bread. You pay for term insurance, you get term insurance. They make some money, not a problem. However, the problem comes in with them trying to sell you these things, telling you that you're going to have all these savings afterwards. You don't have those savings, okay? You're giving them tons of commission for nothing. Insurance has a place in your financial planning without a doubt in the world. Chances are variable insurance, universal insurance, and whole life do not. Everybody's going to die at some point in time. Your family needs life insurance because should you die before you've provided all the financial necessities for them, they've got nowhere else to go. Now the question comes up at this point, when do I buy insurance? What type do I get? Simple enough. Let's just do that. When do you buy insurance? You buy insurance as early as you possibly can. Earlier you get it, the healthier you're going to be. Insurance is rated on your health. If you have no off-the-wall family history of cancer or mental illness, or who else knows what can happen in the family, you've got no off-the-wall blood chemistries, you don't smoke for the preceding year, you might get preferred rates. You get as much insurance as you can, as early as you can. What type do you get? Term. Annual term? No. You want the longest term policy that you could possibly afford to get. On TV, they will advertise this wonderful rate. You can get $200,000 worth, $250,000 worth of life insurance for $12 a month. That's for a 30-year-old non-smoking on year number 1. That doesn't do you much good when you hit 40, and now that $12 a month premium went up to $150 a month. Over a period of time, you get a 20-year term policy. Means the premium is going to be a little bit more than it would normally be, but will be fixed for the whole length of the period of time, for at least 20 years. If you get a 30-year fixed policy, that's what you want, a 30-year fixed term insurance policy. You'll be able to sleep well at night, you'll know what the premium is, no surprises, you're only paying for the insurance, and there are other ways to save money outside of insurance. Very few people will the savings component of insurance actually make sense financially. So what we've covered today was very simple. Insurance companies are there to make money. They are major, big business. They're not there to help you. What type of insurance do you get? The longest term policy you can possibly get. 10, 20, 30 years if at all possible, depending on what your health is and the cost of the period of time. You want to avoid the variable products. Anything that has a savings component to it is just throwing money at the insurance company and generally doesn't do anything for you. You look at what you have, look at your family situations and your needs. You'll be well on your way to your ultimate secure retirement.
And remember, the more you learn, the more you earn. I'm Dr. Fred Rouse, the real money doctor, and I'm here to help you get, protect, and enjoy your money, life, and retirement. Until we get together again, please take the time to enjoy your life.
If you like this video and you want to know more about how I can help you create your iconic life, for a free report, head over to drfredrouse.com/iconiclife.